Hey everybody, Carlos here from Omega Plus Trend from the Forecast Mastery Program and following up with a swing trade analysis follow through. So I have in front of me a chart with the micro contracts and I want to walk you through the steps that I've been following on how to position ourselves for the swing side of things and how you can actually do the same. If you're trading micro contracts, it is the best opportunity that we have found recently to start practicing and migrating from day trading mindset or tendency into considering some positions into the long-term perspective. I know that the feeling of buying and selling and forecasting in short-term day trading is more profitable, but you must be more accurate and be profitable more often than not, right? So what I'm trying to demonstrate and prove is the fact that thinking like the big players, where you can position yourself ahead of the time and just place one good trade and just let it flow until your targets, your objectives are hit or you get stopped out. It's a little bit better for some of you who have been reaching out saying, I don't have time to be on the day-to-day operation or grind of day trading, and I would like to find an opportunity or a way where I can just place a trade and manage it accordingly. Even though it's just only going to be one or two good trades in the week, that will suffice for me. All right, so that's a mindset. So the process for you, I'm going to show you two type of trades in the same block and the same process. And I just want you to be the judge for yourself. Here's the process. I'm on a 2-hour chart, but I'm going to switch to 4-hour charts. So based on all this information, all I can say is in order for us to be able to pull this off, the 4 hours and daily will be the best opportunity for us to use to gravitate towards this type of great setups. In my opinion, 4 hours, it's kind of the in-between process where you can have the best of both worlds. Basically, you're going to pull the trigger and look for opportunities as a day trader, but manage the trade for swing trading, for the swing trading side of it. So here we use the framework that we teach inside the Forecast Mastery Program, and basically we identified on pullbacks potential support zones area where we're expecting the market to bounce from those areas. Then we can drop down to lower time frames and fine tune the entry, which is exactly what this setup here you can see happen. So as the market progressed and went straight to the zones, right, you can see these two big zones right here. 4-hour support zone and intraday resistance zone, and the market just gravitates between those two levels until they broke out and continue. So I believe this position was executed, if I'm not mistaken, on the breaking point in Friday the 22nd. We're at the 25th, so 3 days ago. And we've been holding this setup so far since then. At the beginning, the maximum risk factor is going to be below the zone. So it was right there. And you can see that I was risking about $851. And out of all the targetings that we're looking for, I'm aiming for a big swing up in there. I'm not saying it's going to happen. Hopefully it does. But it might take a month for me to do that, okay? So here's a part of the caveat of all this process. Are you okay of placing one good trade? Don't touch the market anymore. And hopefully if it works out, will this suffice for you to say this was well worth it, right? Will you be willing to risk $151 for the potential of $4,200? You can use another targeting if you already know how to identify those. Maybe this is the one that you want to go for, right? For $3,000. Again, $851 for $3,000. We are up right now $1,200. and the market is continuing. I'm on a 4-hour chart, and as the market went up and opened up today, notice that there is no stress at all. I understand how can I manage the trade accordingly, and basically I was just pushing through my trail, and I'm locking 623, my worst case scenario now, out of 4 contracts that I had at each one of these intervals, or I call it checkpoints. I liquidate some of the positions by doing an average out, and basically I just follow through with it accordingly. I noticed that the market created a pullback and now broke again the resistance zone number 3, as it needs to progress and keep going into synergy zone level number 2. And this purple zone area here is a very important one. That is the one that I'm actually mostly inclined to see how it's going to react. Purple levels are very highly defended by sellers at this point, and that's what I'm actually looking for, to see if we can just hit those levels up. It doesn't matter as the market progresses. The worst case scenario for me right now is 623 profit. The beautiful part, I just placed this straight once, and I just looked at it maybe for 10 minutes every day and see what's happening. This morning, I went in, checked the market, see what's going on, validated with all our tools, and I thought it was still bullish, and I'm okay. So I managed the trade by just tidying up my stop, basically, and there's nothing else I can do at this point. There's no me going back and forth, what's going on, the market's pulling back or whatever, all this crazy stuff. There's nothing else I can do, okay? So this is the part of the difference that I need you to see. There's nothing wrong about day trade. I love it, and I still do it. I just recently created a quick scalp trade setup. If you haven't seen it, check the link anywhere below. If you're part of the group, I think I posted it in there, where I walk you through the process, how I use the Omega Boost trend to let me predict what market I should pick for the execution of a quick trade. And again, this was today on the NQ to the upside. So reinstating again that I was right on holding the trade to move into the higher ground. That's what I'm trying to embark in here. And here's an MES trade. Same thing. I don't have all the bells and whistles of the analysis on the chart, but the same process applies. The worst case scenario at this point, I'm going to tie it up. It's at $272. So again, same process here. I went long in here on the 22nd, right? I mean, yeah, on the 22nd, again, 3 days ago. There's nothing else I can do here other than tidying up my stop here. And you might say, hey, why don't you just tidy it up a little bit better, or a little bit further up, until they break above that previous day close area or making new highs. I don't count that as an actual end of a pullback, because they haven't broke previous structure, right? So it's just price action analysis at this point. So I'm going to set it up here at the 250 mark, and that's going to be my worst case scenario. But my long-term analysis is assuming that it will hit that level of 65.47, hopefully by the end of the week. The point is, it's something that I don't have to pay attention to. I already liquidated some of the positions, and so be it. And this is the key. And you might say, but Carlos, don't we make more by getting in and out on the market if you can time it on a lower time frame? Yes, but pay attention to the fact that more executions and more commissions, the more times you have to be right than wrong. And understand that if you're good for it, by all means do so. I'm trying to so slowly shift between two modalities, because at the end of the time, what we look for is to switch from micros to minis, where we do less trades and let the market take control of itself. And I will show you how this looks on minis so you can see the difference. All right, so we are back, and this is the E-mini S&P. I am showing you here the exact same 2 contracts. So instead of micros, these are minis. Look at the big difference in the same positioning. It is based on the 4-hour chart, a little bit more It's just a little bit of a different analysis, but the process is the same, right? The market reached a daily 4-hour massive support zone area, waited for the rejection and transition. And this position, again, was made on the 22nd. As you can see, it's right there on the transitional upward movement. And you might say, but I see the difference of an entry before the other ones. Obviously, I mean, I was trading them differently, different market. But if I drop to, let me see if I can do this. If I go all the way back, and I'm on a 5-minute chart here, and go into the 22nd, you can see here on the 22nd, there you go. I'm gonna lock that in. There you go. So that's the 22nd. Look at the reaction of the market, right? As the market progressed and dive deep into the area. Let me go back. I'm sorry. Here we go. 4 o'clock. So 1 o'clock, this transition up. The market just went basically to the upside at the 9:30 open on the 21st. So in reality, it was the 21st, not the 22nd. My bad. And as the market entered the zone, on the break of it to the upper side, there is a small structure right there. You probably don't see it, but it's just right there. And that was my key to go in, and my stop was on the other side. So this was on a lower time frame entry. You can go into a 15-minute chart and kind of see the reaction in this propeller move into the upside. And then the initial stop originally, right? I'm going to move this here. It was down here, right? And you're saying, whoa, but that is such a big risk factor. But again, you're looking at the big picture. You're not looking at the big picture. One, these are minis. Number two, and I'm risking $4,000 for a potential of $14,000, right? I don't know if this makes sense to you, but that for me is kind of 3 to 1. Will it happen? No idea, but no one knows about the future, how far it goes. Your job is to do a thorough potential high caliber analysis and forecasting that might happen. Your job is to manage the trade accordingly, because you'll never know. No one knows if it's actually going to happen. And that's why we have other targets in between and so on. And the more contracts we have, which in this case we can because of our limitations of capital, so that's the reason I need to rely on management, right, of the trail stop, not management of getting out. But if we have more contracts, each one of those targets accordingly will become our managed process of getting out, right? So let's say we would have gone in with 5 contracts, 10 contracts. Then, and as the market progresses in this zone area, we liquidate some of those contracts. As the market progresses and hit the other targets areas, then we liquidate some of the other contracts, and so on and so forth. But right now, I'm far off, past halfway through of the job, right? So I am already moving ahead. I'm going to tie it in a little bit better using one of these levels here. And this in block or white space in between, this is my playground. I need to allow the market to do its thing in there. And in my mind, it is, if it comes back, oh, you're giving away like a lot, $3,000. That's not how I'm thinking it. The way that I'm thinking it, no, I'm after 14K. But if I give back $3,000, that's not the way that I'm thinking it. I'm protected. I'm locking $6,000. It's a mindset shift. It's not how much you're giving back or losing. It's how much you're protecting and going away with it, with the fact that you only place one trade and haven't looked at it anywhere. You're not stressed in, out of the market, and so on and so forth. That is the big difference. If you enjoy the fact, we all do, of the excitement, acceleration of the risk factor of buying and selling and whatnot, and no understanding if you should get in, get out, and that's fine. There's nothing wrong with it. The point that I'm trying to make is that your mind has to shift in order to switch your mindset from day trader or scalper to swing trader. And instead of paying attention how much you're losing, you need to say, this is how I'm managing to get that outcome. I'm focusing on the bigger outcome. I'm not focusing on how much money I will give back if it doesn't freaking work out with me. What I'm saying is I'm protecting my account, and my worst case scenario is that in 3 days I only place one trade, and the worst case scenario in the last positions that I have, I will still walk away with $6,000. I'm going to let that sink in. You can just be a little bit more aggressive and tide it up a little bit and say, you know what, I'm going to lock in $7,000. And yeah, I just made another $1,000. Get it? So it's up to you. But if you notice, what I'm trying to do is being objective. I like to manage this on a 1 and 4 hour chart, preferably 4 hour chart. And I see this happening like a little bit better. That the market is most likely gravitating to continue further higher, but they might not. Okay. So we can tide it up a little bit more if we want, and locked in another $300 or so. But the reality of the fact is this prior resistance zone that they left behind should be my support zone, and I should be under it if I'm aiming for that big swing. So one of the caveats here that we can do, and I'm going to do this live for you, is saying I'm going to go that route. So here's what we're going to do. I'm going to liquidate one of the two, boom, and I'm going to then move this back here. See what I did? I just locked in my profits that I needed, right? $4,000 for 4,500 locked in there from the last position. And my worst case scenario right now would be $3,000. Let me see if we can do that. There you go. And now we just set everything up, and I'm still possibly walk away with $7,000 if it hits that target, hopefully, or walk away with another 3. Does that make sense? So the same thing will apply in this instance right here. We're going to lock in a little bit better. I'm locking 6. I got 11. So let's do the same thing. Should we? I would love to go for the bigger prices right there. And quite honestly, this one I'm not even going to touch, because I know these next levels are still going after. And if I just demonstrate this for you, then I'm walking away. I could leave behind probably 100 pointer just to prove a point that should be clear by now. All right. With that being said, I hope you enjoyed and understand this process. I'm going to aim here for this target. I forgot to place a target right in there. Hold on. There you go. So I'm back into the 4 hour chart. I'm trading the same 2 contracts on the NASDAQ. And that will be the potential outcome if everything pans out to be right. If it doesn't, then it's okay. The worst case scenario is one of the next level would be 30K, right? Or perhaps this levels here, that's the one that I'm actually aiming for. That would be 20. Does that make sense? So it's up to you based on the assumption of your analysis and how much you trust them. And that's what I'm after. I'm going to leave you with this secret. The market tend to gravitate, this is called symmetry, price symmetry. Whatever the market has done before, they tend to gravitate to repeat into the future at around 60-80% of the time. And here's the kicker about this. If I take this length of the move, I project this from the pullback that they left behind, and that would be the target of expectancy. Isn't that insane or what? And let me give you something else. That target that I just enabled there or identified at 24,336 wasn't made or projected using this technique. This is a completely different technique, and it just now gravitates toward being the specific pain point that the previous movement of the past projected from the bear pullback bottom, that will be theirs. That means that this bar right there, this line right here, it's a purple line. It's 3 times confirmed. I'm going to take it one step further. In the last pullback, I'm going to see here, there's a choppiness. I will take this as a triple bottom. So from this swing low to this swing high, I project it here from the same bottom, and it's close to that first target below. See where I'm going with this? Meaning I can aim possibly for this target because this projection right here, it's similar, but I'm going to take it one step further. If I project it from the bear pullback bottom to the bear high and bring this over here and project it to the same bear minimum, same level of outcome, 4 times confirmed. I hope you enjoy the price action structure that the market tells us what they have done before. It's highly probable that it will repeat the process into the future. What we can control is how fast they will gonna do it. This is Carlos Diaz from Forecasting Mastery. If you want to learn how to actually pull all this stuff up, no matter the market, the trade that you're trading at, the market you're trading or the asset classes, just reach out to us on the info. There's a link below, or reach out to someone who shared this with you. And we're absolutely going to teach you the power of forecasting so you can take your trading further. And before I leave, this is applicable to any market in any asset class as possible. Here's a commodity that not many people think or know that exists, which insane results. And here it is. Have you ever thought about trading coffee futures? Same analogy, right? Look at this beautiful setup. This is made on daily chart, by the way. This is a structure of potential reversal. Once they broke structure, notice I actually didn't went close to the structure. I waited for a little bit more of a confirmation. That was the entry, and this is only one contract left. And just to be clear, this position was done in August 12th, more than a month ago. So I've been holding this for a little bit of a month ago, and I'm approaching my last target. Will it hit? No, I don't know. Here's the thing that I need to pay attention to and is important. You see, I'm going to switch here. My zone, which started at 3386.85, was hit by the tick, and now the market's pulling back down. So it's highly probable that I won't get what I was expecting. So it's time for me to perhaps lock in a little bit more and just give it I'm still going to give it the chance and the benefit of the doubt that they might want to pull through and reach those levels up. But in the worst case scenario, I'm going to walk away with that single trade setup with about 21 grand in that position right there. Trading coffee futures. Lastly, I'm going to leave you with this. Notice that I'm not trading 30, 50, 10 contracts. Now, why? Why do I have to do this, right? There's no need to risk or overexpose your account with only a bare minimum. If you know what the heck you're doing, you can milk the cow as you can never ever thought possible. Now, for sure, I'll leave you with that. So thank you. Let me know what you think on the comments, and I'll see you in the next video.